All right, what's up, Mortgage Coach community? I am interviewing Mark Karetskiy for the very first time. Although he has been on a couple Mortgage Coach calls lately, we've been doing this total cost analysis a day, TCA a day accountability meetings every Tuesday at 11. And you were on today's with Jeremy Forcier, and you hit 300 total cost analysis today. That means you became a black belt today, brother. Congratulations.
I appreciate it. I appreciate it, man. It's been a long time coming, and it is always a pleasure to be a part of any Mortgage Coach collaboration. And Jeremy Forcier stopping by, I'm like celebrity starstruck over here. It's awesome.
Yeah, no, that was really an incredible meeting today, because not only did all you guys participate, fully transparent on all of your metrics, but then to have, see Jeremy in action as a coach and sales manager, helping you guys improve your conversion, helping you guys reduce your price exceptions. It was a really fun call to watch, man.
I cannot wait to go back and listen to it. We were talking about before we started recording, every time I'm a part of some sort of, whether collaboration or whatever we're doing, it feels like when you're in the moment, you take away these like awesome takeaways, but then you go back and watch it, you read over your notes, and you're like, wait, there's something I missed. And I feel like there's a lot of value in that. And so I'm looking forward to listening back to this last call and seeing what else I missed out of it.
Well, I'll tell you, we have two coveted playlists. One is called the Best of 2021. So every year for, 5-6 years, I've been creating a playlist of the best for the year. And this was a no-brainer to make it to that playlist. And we also have all-time best, of the 12 plus years I've been doing interviews. And I only add a couple to that playlist every year. But every year there's 1 or 2, 3, maybe some years there's been 4. I added that to all-time greatest because it was just, getting to look in and watch a bunch of loan officers being held accountable, and everybody was getting better. And there was just so much gold in that. So you were on one of the all-time best calls, at least for my opinion. So
man, that is an honor. It's funny. I was telling you, I moved my career. I started over in the whole retail world in 2018. And I literally, man, I thank you so much for all the value that you are putting out there and providing to our community. I literally watched a Mortgage Coach video every single morning between 2018 and 2020. This year, I've just been more swamped and really focusing on giving myself some time away from mortgage, because I feel like you can only go so far. I feel like you need to kind of feed into the other sides of your life. And so I've been focusing a lot more on mindset and discipline, and really just making sure that I'm not just taking care of my clients, but I'm taking care of myself at the same time.
Well, I love that. Well, hey, congratulations. You going on your 3rd year now as a referral-based retail loan officer. Mark did start in the mortgage business in a consumer direct platform, but he's going on his 3rd year as a referral-based self-source loan officer. Did over 100 loans last year. He's averaging 10 loans a month this year. But to me, what I'm most impressed with is you hit 300 total cost analysis. That means 300 families got more than price. They got advice. So let's talk about your journey. 1, why did you become a mortgage coach? Then 2, just kind of tell us that journey of how you went from, oh, that's a good idea, to you've adopted it, you're using it, and now you're doing a TCA a day.
Absolutely. I have a fun journey, man. I am a first-generation immigrant. I was born in Russia, moved from Moscow to Boston when I was 7. Really saw my parents really start over in life and battle the challenges that we all know that immigrants face, and really building themselves back up to where they were able to purchase their first home. And that moment in and of itself is one that, in hindsight, changed the entire trajectory of my life, my parents' life, and everybody that is to come, because it in hindsight is what gives me the passion for what I do. I saw my parents buy their first home, literally take us out of the inner city, get us into a school district in a city outside of Boston where I was literally 3 years behind, and I had to catch up quick. And it was the school district that brought us there. It was the school district that allowed me to get into the college that I went to. It was the school district that even after the '07 recession came and hit the Northeast a lot harder than some of my fellow Texans here were hit, they still walked away with 60 grand. And they are living, 22 years later, comfortably with what we would consider a voluntary mortgage, one they could have paid off, but it just doesn't make financial sense and strategy to do. And none of that happens without that first home. And so I guess that really is the beginning of my journey. I fell into the business, man. It's funny with I went to school for economics and international affairs. I am a econ poli-sci nerd. Like anything in that realm, like you put in front of me, I will dig right through it. I had a big focus on energy at the end of college. And so I love just the oil business and just energy in general. But I looked fully into it, and I almost became a counterintelligence spy. I was blessed with enough self-awareness to know that I do not follow blind orders, and I like to make my opinion known, which I realized that is not a recipe for success. I started looking into becoming a financial advisor because I understand money, and I love being able to help people. But again, the self-awareness told me, hey, you're 21 and I don't trust me with my money. Why would somebody else trust me with their money? So I figured out, hey, if I've got the money, people got to come to me. And so I got a random interview after college with a company called New Day USA. Started working with them, solely focused on helping our veteran community and active duty both buy and refi. And then since then have really just continued to expand, continued in the refinance side, but really saw in 2018 exactly where the market was heading and knew that, hey, the purchase business is where the money is going to be made. And at the end of the day, I knew that that's what my passion was to begin with. And so I made a big bet, moved from Maryland, the DC area, over to Dallas. Wasn't licensed in Texas at the time, was licensed in 22 other states. Today, I am now licensed solely in Texas. I have 8 million people in my market that I am literally just trying to get 1% of. And if I can do that and I can have awesome mortgage coaches in my network around the country, then I know that I am doing my part to take care of my community and their friends and family. So I guess without rambling too much longer, I guess that is from start to finish in probably 90 seconds or so, maybe a couple minutes.
Yeah. Well, I'll tell you what, I don't think I've ever, again, first generation immigrant, congratulations to you and your family. Congratulations to them for, putting you off on this great start. But I've never heard almost became a counter-terrorist spy to.
Well, so they wouldn't let me do anything versus Russia. And so I don't know much about Ukraine. I don't know much about the Baltics. And again, I don't know about the keeping quiet. I like to make my opinions known.
Yeah, right. But went from considering that to financial advisor to today as a mortgage coach. So when did you become an actual mortgage coach? Obviously you're a black belt now. And so I think that's where you really gained a level of mastery. But when did you just say, hey, you know what? I need to get to, did someone refer you to it? Did you see us at an event? How did you hear about us? And then, when did you become a mortgage coach?
So I have heard of Mortgage Coach for years. And I had seen some of you online, but this was again in the direct to consumer space. A lot of that world and those LOs are really not, they're not, what's the right word? They don't get access to you. They don't get access to the rest of the mortgage industry. Us retail and executives, we're all very much intertwined. But I felt like in that direct to consumer world, you're shut off from the rest of the world in a way.
Right. So you didn't know about us when you were doing consumer direct?
No, No,
Got it.
I mean, I knew your face, I knew your name, I knew the mortgage coach name, but I didn't know what all it did. In 2020, Corona came. I think you remember something about that. And all of a sudden, everybody was eligible to refinance. Everybody was now jumping into the purchase market. And I was at the time a single LO, no dedicated support, and I just could not keep track of people. And I could not find a good way to present options that actually presented what I was trying to show. I got really sick of trying to walk people through it over the phone and them not being able to follow the all the numbers going on in my head. And so it was May 26th, I've got it pulled up now, May 26th, 2020, I decided to go ahead and invest in myself and my business. I honestly, I'm doing the monthly plan right now, but anybody that I have talked to recently, I'm a huge advocate of Mortgage Coach, and I tell them, listen, don't do it like me, just pay the full year in advance, and you are going to be fully satisfied with the ROI that you're going to get on that.
Love that. So really, you've become a black belt in just a few more months than 1 year. You know, you've done 300 TCAs in a single year. So congrats on that. Let's talk about, you know, when you told your story, it was interesting. You said, hey, I wanted to just really improve efficiency. I didn't hear you say, oh, I wanted to improve my conversion. A lot of top producers, you know, they come to Mortgage Coach because it gives them a higher conversion. As you heard on today's call, guys, by the way, Tony Blodgett, I saw you just comment, you know, on Mark.
Shout out to Tony, man. Tony's been one of the greatest mentors that I never would have come into my life without Clubhouse. And I'm surprised, Dave, you and I haven't jumped into Clubhouse or the conversation on it. But since I did bring it up, I did get my third lead today from Clubhouse. And
nice.
So
your third lead from Clubhouse?
Third lead today.
Oh, third lead today from Clubhouse?
Yeah.
How many leads are you getting per week or per month from Clubhouse?
I got onto Clubhouse right around Christmas time, 2020. We just closed our 8th transaction that came from an agent off Clubhouse. I have referred, I believe, 5 or 6 buyers in other states from Clubhouse over the last couple of months. But yeah, I mean, it is an incredibly frictionless platform and allows a lot more women to actually be involved because it's audio only, and it is a great opportunity to build a brand and a presence not just in the US but specifically in your local market. And that's what kind of I've been working on, and just getting involved with more real estate agents that I wouldn't have met otherwise. And there's a lot of them out there, and there's a lot of referrals to be giving it, or it's being given out on there, not just lender to or agent to lender, but agent to agent and lender to agent.
Love that. Well, that's pretty interesting. I didn't see that coming. So you just heard it. And Mark is also part of the Mortgage Coach on Clubhouse. He's one of the moderators of that. Every Monday and every Friday at 8:30 Pacific, we support a Mortgage Coach tribe. Tony Blodgett is one of the OG leaders of that group. And Mark, you're new to the moderator crew, so thank you for all the value you give back to the community. So I always like to get scripts. I like to get tactics. So that's tactic number 1. We learned that, hey, you can get leads from Clubhouse. What are some other strategies or solutions in how you're using Mortgage Coach that's either powering your business or it's part of your focus?
Man, Mortgage Coach is just a part of my business. I mean, I am now a mortgage coach, and I mean, I have my past clients or my current clients that are referring their friends and family. Those people are coming to me asking me when they get their mortgage coach. And so, I mean, Mortgage Coach is a part of every single day in the office. Every single day I open up our business analytics, I open up my CRM, I open up Mortgage Coach. I mean, there are just, we use it for a different reason every single time, right? It depends on what we need to show to our buyer. I work with a lot of first-time home buyers, man. I'm kind of the first-time home buyer guy around here. I also work with a lot of vets. And then I also work with those, there's actually, I started working with a lot more investors. Part of that is from Clubhouse. Part of that is just more and more people being acclimated to what all is going on in the real estate industry. But that final kind of market that I work with is those move-up buyers. So house 2, 3, 4, right? And so at every different stage of that journey, they have different priorities, they have different responsibilities, they have different goals, they have different dreams, right? And so in reality, Mortgage Coach is a tool that helps them go from point A to point B. We use it with our first-time home buyers from the very beginning to give them a lay of the land and what are they looking at and what is a down payment versus closing costs and how do those combine to cash to close? And what is the difference between taking the interest rate you qualify for versus paying down or buying down the rate versus you taking a higher rate? And so it is a tool that we use for everything. I guess one of the biggest things that I have taken away recently, and I think you'll enjoy this, and I think a lot of others will be able to benefit from this, is we are actually using this in our offer presentation to the listing agent and the seller. I'm in Dallas, Fort Worth. We are one of the most competitive markets out there. I don't necessarily have too many properties that are under appraising, but it's always a concern, right? When we're going 30, 40, 50, 60 grand over asking price. We need to be able to both provide the certainty to our buyer, but never mind our buyer, but we need to provide the certainty to the seller that our buyer is going to be able to perform if we have an appraisal discrepancy, right? And so I know you and I were talking about earlier. I don't know if you want me to share my screen.
Yeah, well, I want to see how fast you can create one because, you're hitting that black belt mark. So I want to test you to see just how legit you are at creating it. By the way, before you start creating one, I want you to click on that setting in the top right-hand corner. I want to remind everybody, if you want to know where you're at, click on the setting tab. You'll see that he just hit 301 TCAs. Notice that they have been viewed 1,847 times in the upper right-hand corner. You'll notice they've been viewed 1,847, which is impressive. There's definitely some room improvement with adding a video. You're at 56. And as you heard from Jeremy Forcier today, like the
95%, man.
Yeah, no, it's true. It's true. I've interviewed Jeremy a bunch of times, and then it looks like you're creating a fair amount of rent versus own TCAs. Look at that. You've got, how many views is that? Is that 1,268? I can't see the number.
1,288.
1,288. So you've had over 1,200 views of your rent versus own.
I gotta get, well, the seller buy downs, we did a lot of them in 2018, but that was before my Mortgage Coach days.
Yeah, right. You got pretty much everything, but are you using HomeBot? Because I know you work for doesn't have integrations. Do you have the integration with Mortgage Coach set up?
Absolutely. So this is my HomeBot. I think the two tools go literally hand in hand, and I'll show you. I wish I could tell you that my 11 or so automated TCAs were just from the consumer clicking the button. But at the same time, I'll show you exactly how I'm looking at it because I'm actually generating it. I'm generating a TCA through HomeBot.
Oh, really? Yeah, I've seen that move before where loan officers use that as a shortcut. And yeah, you've created 23 automated TCAs in the last 30 days, and you've created 11 automated, which I take that to believe that some of those are consumer direct and some of those are you using that as a shortcut. Is that fair enough?
Yeah, I would say it's probably 60-40 that I'm doing it. Like 60-40%.
Yeah, I got it. Guys, there is a live audience here, so we've got a dozen or so.
So I will just show you guys literally. This is
I want to see you create one. Yeah, create one from scratch. And I'm going to time you. I'm going to time you real quick.
So we're gonna say this is dear seller, and we're gonna do this as part of a offer strategy. And
I started the clock.
um,
You're being timed here.
15K appraisal gap. Now, I work with a lot of first-time home buyers, so I'm gonna do a rent versus own, and I wanna actually show the seller. A lot of sellers get really excited about kind of what is the opportunity that they're creating for the buyer. And so I actually missed this step. We're gonna make this a lot easier. We're gonna hit this
I was
strategy.
going to say you're not using strategy templates, but there you are. You are using a
Man,
strategy template.
I
Boom.
have it no other way. So what we're gonna do is we're gonna show a prospective buyer buying at 450. Now they wanted to do, actually, hang on, I'm gonna do
By the way, guys, we're at 45 seconds into this because he used the strategy template. It
I could do
fast tracked
this.
what he's doing massively. You'll see that it already filled out like 4 or 5 programs. We're at 1 minute.
So, and this is me hitting the wrong one.
It's all right. You know, a little.
I'm
stress
gonna
under
start
pressure.
a new one, but we're actually gonna make it quicker.
All right. So he's going to do 2 TCAs. I'm still going to count for both.
You're good. We'll make it happen. I'm quick on my feet. Go. There we go. I hit the wrong one earlier. So we're going to show a buyer that qualifies for conventional, but we all get the pushback of, well, can they go FHA, right? I am blowing away both agents and lenders by my ability to be able to get FHA buyers under contract. And part of the reason why is mortgage coach specifically. So this is a 3% down at 260 with a 3 1/4 conventional with monthly MI versus doing, I'm going to show this is 3% down payment assistance with FHA. This is with the property appraising 15K less. And I just want to make sure that the appraisal gap is in there. It sure is.
Notice, guys, he created a custom fee appraisal gap.
So then we've got the no MI cutoff. We've got the max DPA. That's with that. And then bing, bang, boom.
Boom. And then, guys, we're hitting the analysis now. One of these days, hopefully we'll get movement, your company, to do the optimal blue and fee integration. Could have been a little faster there, but so far you're like at 2 minutes.
As much as I agree with you, man, for anybody that doesn't have a corporate account, don't let that shit be an excuse, because it is worth its weight in gold.
Roger that. Look at that, guys. So we're now at 3 minutes and 24 seconds, but he spent a minute on that first TCA. So in 2 minutes or less, he's got this beautiful presentation.
Now, sometimes it gives me a little bit of trouble because I move too quick, but that is why I go into preview mode and make sure that I'm looking at it correctly before I send it out.
Yeah, let me know when you're done, because I want to make sure we show off a couple of those other features, where to add a video and how to live highlights. So when you're done, let me know. And you're still under 5 minutes.
We're done, man.
All right. So let's do this. I'll go back to that screen, the input screen. I'm going to stop timing you guys under 5 minutes. And really, he can create a 2-minute TCA. In the upper right-hand corner, you'll notice that there's record a video and there's preview highlight. Do you use, obviously you've used the record video 56
I
times.
go in here, man. I never even noticed that it was up there.
Well,
I go in here.
Okay. Do you do it with a mobile or web? Which way?
I do web.
Got it. So guys, you could click your mobile device and it will literally pull up your phone, which I recommend because you can, one, control your background, and two, the camera and the audio on your phone is higher quality than most desktops. But good on that. And then how often do you use the live highlighting feature? If go back to the screen.
I'm always going to highlight, I mean, specifically what it is.
Use that all the time. Use that all the time.
Yeah.
Do you do it live with the client where you'll give them the link to the TCA and then you'll edit it while you're talking?
Oh, yep. Yep. We had actually, I think it was two different, there was a refinance consultation in between our 1 o'clock and this call, and then a buyer presentation that we edited right in front of them. And they were like, wait, all the numbers just changed. Like, yep. Just updating it per our conversation.
Yeah, customers love that, guys. Anything you want to share about this particular DCA before we stop sharing the screen and then get back into some
Well,
closing?
yeah, so let me just show you what it's showing, right? So number one, actually, let me do this because I didn't title it exactly correctly, because this is just a regular FHA loan. I'm going to lower the rate. But so what I'm showing is we've got this 3% down conventional, right? But we know that we're going to have an appraisal concern. And so what I want to show first side by side is, listen, an FHA loan, yes, it's going to be a little bit more monthly. It's going to be a little bit more out of pocket. However, our ability to do down payment assistance is, when we do it with FHA, the down payment assistance is a grant. So it's a gift. So there's literally no repayment. And so what I want to show them side by side is, listen, we really wouldn't do this option 2 because it doesn't make much sense. But let's look at this option 3, where we're actually doing an FHA loan, but we're doing it with down payment assistance. And yeah, the payment is higher. And yeah, there's no such thing as free money. But it is up to the buyer to decide what is the difference and how much do they value this difference in out of pocket, as opposed to this difference in their monthly payment.
Yeah,
I don't know too many
big difference.
people that's going to make a big difference on their monthly payment. But that difference in out of pocket, that makes a big difference, right? Now, I also want to prepare the buyer for, just in case we have a $15,000 appraisal gap. And because we're doing a minimum down payment assistance, I'm showing them, hey, the purchase price, or basically the amount we're going to finance, is going to be the lower appraised value, which I'm saying is $245. And normally, and every agent is telling their buyer, hey, if you're doing FHA or minimum down, you have to pay the entire difference, right? Well, not necessarily. In this example, what I'm doing is showing them 5% down payment assistance. The payment is actually less. And yes, their cash to close is going to be different. However,
it's a manageable amount, though.
And we can subsidize it with this down payment assistance. And so you could see the 15K gap in here in prepaids. And then the additional, I'm showing the down payment assistance in the point section. So that way I can show them side by side, this is what you're looking at.
And at the end of the day, guys, the name of the game is clarity. So the borrower and the buyer knows with clarity, plan A, B, C, and D. They know worst case. And when people have clarity, they have confidence. And when people have confidence, you convert. They do business with you and they don't grind you as much, and you're more profitable. So nice, bro. So anything else you want to share on this, or anything you want to share with HomeBot before we go into kind of a wrap-up mode?
And there are just so many things that we can show. This is the refinance that I was looking at earlier and that I brought up a second ago. And so I did leave a nice little video in here.
Nice job on the video.
But so I for the most part, refuse to do 30-year refis. We use Mortgage Coach to coach our buyers or our homeowners as to why they shouldn't go back to 30 years. At one point I was showing her side by side 30 years, but as you can see with option 1, specifically showing her a 27-year, with option 2, a 25-year. And then we were considering going down in term. We were looking at a 20-year, but we kind of ruled it out. And so I changed it to the 15-year. And you can see that they are not all too different from one another, but there's a heck of a lot of strategy in here. So let me just bring this back to what I think the best strategy is, which is
Right now, guys, he's showing and using the feature of Mortgage Coach where he's showing some of the money going towards prepayment and some of the money going towards an asset account that's interest bearing. And so he's really, I wouldn't call it sophisticated. Well, it is sophisticated. Most loan officers wouldn't even be able to do it. But, look at him. He's really given a strategy and giving clarity around the whole decision here.
So I have a love-hate relationship with 15-year loans. I hate paying interest, but I understand and very much appreciate opportunity cost. So what I firmly believe that option number 1 is the best option for my buyer, or for my homeowner, knowing her short-term and long-term plans. Let me actually change this to how I would have shown this to her initially. So I usually will want to look at the first 3 years and the first 5 years. Again, I'm showing her option number 1 is her doing a 27-year loan. Right now, she's at 4.375. I'm showing her at 2.875. We call this the roundup strategy. So instead of her paying $19.37 a month as her minimum payment, she's just going to round it up to $2,000. Just call it $63 extra a month. And then instead of her forcing herself with a 15-year to go up in payment to $25.30 or $25.60, give or take, I'm showing her, hey, if you take $500 a month and you decide your destiny and you keep your minimum as low as possible, but you take $500 a month, you put it into an ETF or something similar, and you get an 8% return on your investment, you're going to have more liquidity, less stress, knowing that, hey, in Texas, our taxes are just going to keep going up. So your payment's going to keep going up. You know that you're going to have access to the lowest minimum payment. You're going to, no matter what, even with closing costs included, save yourself $7,800 over 3 years. But look at the difference in the estimated equity based on current versus option 1 versus her forcing herself to go up $600 a month higher. Now, are those technically higher? Yes. However, are those more important for my client? Knowing my client? No, they're not. We kept going back between what's the best strategy. This is what I would say is her best strategy. It may not be the highest savings, but it creates the most bang for her buck and allows her to have the most flexibility. And I don't think any one of us can discount that after seeing our clients go through COVID and everything as a result of that. So well, I guess without rambling too much further, there's so many things I could show you in here, man. And we could powwow all night.
Yeah, well, you clearly have a lot of passion for giving people options, giving people advice, and helping people make whatever the right decision is for them. And at the end of the day, that's what it's all about. It's not about selling rates, selling loans. It's about going beyond the transaction and helping people make clear and confident decisions. So, brother, I am so proud to have you in the Black Belt family of Mortgage Coach. Any closing thoughts? One of the things I recently posted was a new loan officer playbook. So I just put that on LinkedIn yesterday. I don't know if you've seen it or not yet.
I have not. No.
Well, I do want you to check it out, but forget about that. What advice, knowing what you know today, would you give to a new loan officer starting off in the business? Give us closing thoughts on that.
This is starting out in the business or starting out using Mortgage Coach?
Starting out in the business. And by the way, I'm going to make you answer both of those now because that's a
Well, so
let's start
I've
off with
helped
a new loan
I've
officer
helped
starting in the
3
business.
LOs. I've helped 3 LOs in the last 2 or 3 weeks from Clubhouse get onboarded with Mortgage Coach. The number one thing you got to do is you got to print out a approximate loan cost illustration, which is hopefully the last time you ever have to do that out of your Encompass or other LOS. You need to create a closing cost template. I have one for our regular fees, and then I created one for VA because we have no lender fees on VA. I very recently, because we've got an incredible jumbo product, I now have a template for jumbo. But once you have that closing cost template, now you just got to look at your analytics. What are your 3 most common loan types? And what is your average loan amount? And just create a template product for 3% down conventional, 5% down conventional, regular FHA 3.5 down, VA if you do it, and then just start there, right? Once you've got those, now really is where I guess I can kind of bring in the new loan officer strategy. And it's something that I've picked up through the TCA Day Mastermind is honestly go out there and talk with your friends and your family and let them know that you just started, and let them know that your boss, your manager asked you to do a case study and they want you to create a total cost analysis. And would it be okay for me to create a total cost analysis for you? I can guarantee you the people that know you, the people that like you, the people that trust you and or love you already, they are not going to hesitate with talking to you and allowing you to create a report with really no private information to begin with, right? You can create one of these while having a conversation out at coffee, and you can provide a tremendous amount of value to them right off the bat, to the point where they are going to start introducing you. And so what do you need to do? You need to go and talk to everybody that you already know, and you need to ask them who they know that they could introduce you to that are similar. You, in a way, it's really that Jeremy Forcier email, right? The one that I use repeatedly now at this point is, we love helping you. We want to work with more people like you. So just introduce us to 2 to 3 people, and we guarantee you that we'll take care of them the same way that we took care of you. So really, it's just going out and talking to people and asking. And in a way, man, it still feels so new. I really think of going into the retail side of the business as going from the minor leagues to the big leagues. And a lot of that just comes with freaking at-bats, right? And not being afraid to miss, and not being afraid to fail, and just continuing to fail over and over and forward and learning from that shit. Because there's nothing that makes me more mad than not learning from one of my mistakes. And so I would really just say that. I would say get into Mortgage Coach University, hop on YouTube, start watching all these videos, start listening to the pros that are out there giving back. And whenever I don't know why more of us are not on Clubhouse. We've built an incredible community, both mortgage and real estate on there. And we are always, whether it's the Mortgage Coach calls, whether it's just the Mortgage Syndicate Club and all the different rooms that we're a part of in there, we are all in there collaborating, giving back, answering consumer questions, asking questions, answering real estate questions. There is just so much value to being a part of a network. And I think linking up and syncing in with the Mortgage Coach Network, man, for a brand new loan officer, I can't think of any better advice than just doing that to start out.
Well, that was some awesome closing advice for both new loan officers to the industry and new loan officers that are new members of Mortgage Coach. So Mark, dude, thank you for all the time you spent with me here today.
Absolutely.
And all the value you're bringing both on Clubhouse and into our Facebook group. I look forward to seeing you next Tuesday at that accountability mastermind. And hopefully you'll have done a TCA a day and you'll have the right answers for Jeremy. So
we're going to make it 2 TCAs a day, man.
all right. Well, you just said it. So
I'll be so next week. My FOMO, Dave, is so bad right now. I did not get tickets to Renee's event in Vegas next week.
Oh,
and I am freaking out. I may have to buy a last minute ticket. And
yeah, you need to buy a last minute ticket. I will be there on Wednesday. It's going to be a pretty badass event.
It's gonna,
hopefully your FOMO gets the better of you and you get a ticket.
I have a feeling it will. I'm going to Atlanta and I'll be in a Clubhouse Live in Atlanta this weekend. And I am going to get at least 5 total cost analysis over that. There's no chance I don't.
All right, man. Well, have a great day, guys. If you got value from this, give us a like down below. Share this with a mortgage friend that you think would get value from it. And Mark, thanks again. But this is a wrap. Take care, everybody.
Great to connect, man.
All right. Take it easy, bro.